Ever occurred to you that you have taken the perfect setup according to the indicators or the strategy, whatever you have devised, but still you have ended up making losses? The volume confirmed your strategy, the indicators were all lined up, but you still end up having made up the losses. It's not about the strategy which is going wrong. These are the 7 mistakes which you are making in your day-to-day trading, and I bet you are making at least 3 of them even now. The best part is that these all can be rectified. Hi, this is Mohit Shankar. This is Trade Smart with Mohit. I am an NSM certified research analyst. And what we do is that we talk about the strategy and the indicators, or probably we delve more into the technical analysis part of it, along with the risk management and the tools and the indicators which you need to be using to become a successful trader. You can be an intraday trader or a swing trader or a positional trader. Irrespective of the style of trading, what you do, these principles are all fractal in nature. Technical analysis itself is fractal in nature. It means to say that you can apply that into scalping positions, or you can apply you being an intraday trader or even in positional trading as well. Let us directly go into the 7 mistakes which are avoidable, but we still are making those mistakes. The real problem, as I told you, is not your strategy. It is finding is consistent. The mistakes are almost always the same 7, because I have been training many students. I am a faculty with Futures First Academy, as well as I have trained my own students when I conduct the batches. Now, when I tell them to journal whatever trades they have taken, be it the entry, the stop loss, or the target, whatever they've achieved, what was the reason behind why they were stopped out immediately, or what was the reason why they were successful in on that particular day. We have collated all the data, and we have summed up all these 7 mistakes, and this is out of experience. I have been trading from the past 10 years, and these 7 are the common mistakes which every trader does. Now, one is this: the behavior. It is not the indicator, as always tell you, it is the behavior around the trade itself. It's your behavior. Understand that the discipline and the way you process your mistakes quietly drain your account. Say suppose today you imagine that you have a strategy wherein it says that you were supposed to be taking a trade at around, say, around 10 o'clock. Now there are 2 factors in deciding what would you want to trade. Imagine that say I have a time entry and I have a price entry. Now both the things are right. Whenever I sit for trading, it is usually the time as well as the price. For me, both are very important. The people say you can't time the price, but these two are major factors for me in deciding at what entry or what price I enter, or at what price I take a position. Now imagine that you have taken a strategy. You have a strategy wherein it clearly says that you are supposed to be trading not earlier than 9:45 a.m. You have to wait for the markets to settle down, because 9:15 to 9:30 is the period wherein the market volatility will be too high. Now it's your behavior, as I told you, which is messing up, not the strategy. So it is, say suppose um, imagine that we are supposed to be taking a trade at 9:45, but the fear of missing out on a trade is so much that when you sit in front of the system before 9:45 and you feel that, okay, fine, let me just take a trade at around 9:42, even 2 or 3 minutes difference can bring in a large move in the markets, be it Nifty or be it the Sensex. Might hit your stop loss, and you might sit out for the rest of the day thinking that all you have to do was just stick to a strategy, and your strategy had clearly told you that I should be taking a trade at 9:45. This is just an example I'm telling you. So whenever there is a strategy and you need to follow it to the T, you just need to follow it. And when it comes to trading, discipline is most important than any strategy. So, but the best part of all these mistakes, which I'm enumerating in this video, is that everything is 100% fixable. We will start with one by one, and then we will try to fix this issue so that you don't tend to make mistakes again and again repetitively. So no stop loss are moving it. Now we might have understood this very clearly. You put a stop loss. Imagine that you put a stop loss at around 60 points or 40 points. Nifty, imagine that you have put a stop loss of 15 points or 25 points. 25 points. As soon as it hits the stop loss, you think that, okay, fine, my strategy is right. I just need to probably increase the stop loss a little bit. You already put the place the stop loss. As soon as it nears 19 points negative, what you tend to do is that probably you increase the stop loss by another 10 points. You increase it so much so that at one point there is no return for you. You enter bank Nifty, as I told you, long, price goes against you, and instead of respecting your stop loss, you move it. Let me just give a little more room. That little more room will eat up your entire capital or probably will cause you more losses than you can recover in the next day. The fix is very simple. You have decided on a stop loss. Before you place a trade, you have to put the stop loss. Just write that and keep that in your mind. So before you place a trade, you know this is the maximum risk I'm going to be taking up on a one particular day. It's not that we don't know. We, as you and I as a trader, we know that. Don't remove the stop loss as soon as you see your account turning into green. It's okay. The first thing as a trader you need to learn is accept the stop losses and move on. Not every single day you will be able to make money. That is the hard fact of it. Fix stop loss in mind and always respect that. Over trading and revenge trading. Now suppose I quoted first example to you. Imagine that you had taken a 945 trade. It hit your stop loss, 60 points gone on say Sensex. Then what you think is that, okay, fine, my trade was right. I just had to wait for 3 more minutes before I place a trade. Again, you take a trade at around 945. Again, it goes to 60 points negative. So instead of you squaring it off at around 60 points, now you eventually ended up with 120 points. No matter, now again you'll be forced to take a third trade. Now what is the fix is, it is very simple. Either you have to take one trade or two trade or three trade. Decide what you want to do. Decide whether you want to take one trade, two trade or three trade. The fix, the hard set a hard rule. Maximum 2 to 3 trades per day, or a daily loss limit, say 1.5% or 2% of the capital. Never exceed more than 2% of the capital. Either you hit one, whether it is 2 to 3 trades, or you hit out, or you hit the stop loss of 2%, you are done for the day. Just close the system and go. Many times I have faced this with a goal of recovering the losses on the very same day. We overtrade, and what it does is it multiplies our stop losses many folds. So try avoiding that. No trading plan or just reacting, or probably if you do not have a trading plan, understand that you are gambling in the market. You need to have a strategy. Be honest. Do you know your entry, target and stop loss before you click buy? Now, whenever I keep a journal, I make sure that if say suppose I'm keeping a journal, or I have a paper in front of me before I sit for trading, I write what is my entry, what is my target, and what is my stop loss. These things, if you don't know, don't take a trade. You might not get a trade 5 days continuously in a row. That's okay. You don't have to trade. So you need to make up your mind what would be your entry and what would be your exit. If there is no trading plan, I always tell this one, you need to plan your trade and trade your plan. If it is not on paper, if you don't have a plan, avoid that day. This is a very basic mistake which we all do. Probably imagine that the markets are falling and you just want to go short. You think that what we say, behti nadi mein haath dho lena. So it is something like this. You want to short and make money in the market, but you realize that there is no entry point. You just have to don't randomly take a trade on that particular day where you don't know where is the entry. The markets always have a tendency of bouncing or retracing or a pullback. What if this pullback hits your stop loss? So it is better you don't have a plan, avoid trading that particular day. Position sizing. So there is a common saying, there is an important thing which says, I don't worry about how much profit you make in a day or how much how much profit you make in a day. I am more worried about the position sizing or the risk management. Never, ever. Just have this in your mind. Never over leverage. You have a position. If you say that, imagine that you have 10 lakhs capital and you have decided that you would not put in more than 2 lakhs capital on a particular day, on a particular trade. Don't exceed that. The thumb rule is that most of the traders follow is 10 lakhs is your investment amount. They separate 5 lakhs and 5 lakhs. The 5 lakhs, they take a trade, and out of this 5 lakhs, they keep 1% as your stop loss. 5 lakhs, you probably park it in liquid Bs or anywhere else. So this is how you get your position sizing right and avoid excess leverage. This is the silent killer. Your strategy might have a genuine 55 to 60% win rate, solid tradable, but if your sizing is so large that one bad trade, if it wipes out at least 5 wins, and the strategy doesn't matter, the math kills you before the edge ever plays out. So I always tell you that single decision is dangerous than any bad entry. So position sizing should be mechanical. So how you can overcome this? As I told you, if you have 10 lakhs capital, divide this into 50 percentage. It is 5 lakh, 5 lakh, 5 lakh, keep it separate, probably in another account so that you don't touch it. And out of 5 lakh, take 1% or maximum 2% risk. This should be your stop loss. Accordingly, you take a position size, be it Nifty, Bank Nifty, Sensex, or equity or index or anything for that matter. Ignoring risk reward ratio. This is the most important mistake which almost everyone does it. I always tell you this is the most important mistake. What is the risk reward ratio? Imagine you are trading in Sensex or Nifty. Imagine that you have put a stop loss of 25 points and your target is 80 points. For the first 3 days, you have made losses. Now, your mentality would be, as soon as it hits the profit, let me take out. Probably it has come to 50 points profit. You said, okay, fine, I'm making 50 points, let me take it out. Or 40 points itself, let me take it out. But ideally, you have to wait for 80 points. That is your strategy. The strategy is telling you at least 1:2 should be your risk reward ratio. I generally prefer keeping 1:3 or 1:4. If suppose if I'm trading in Sensex, my stop loss is usually, if I keep it 60 points, my target would be 200 to 180 to 200 points. So it is close to 1:1, 1:3. Now, you need to be knowing how far the market would move one particular day. If it's a narrow ranging market, probably you need to bring down your target to 1:1 or 1:2, but never less than 1:1. 1:1, if you put, it is suicidal. So even I want to win 80% of the trade, but if you win is 500, your average is loss is 1,500. So it's always like, even if you bring that 51%, if your strategy even gives you 51% success ratio, and if your win ratio is 1:3, then you would still make profit. Or say suppose even if it is 30%, your strategy is giving you the winning trades, and your your risk to reward ratio is 1:3, you'll be still making profit. You just do this calculation and you'll come to know 40% win rate needed. Any strategy, check if you are getting 40% win rate. If that is the case, your minimum risk reward should always be 1:1.5. 1:1.5. That is, say suppose you are keeping 40 points as your stop loss, your target should be at least 60 points, be it Nifty or be it Sensex or any instrument. This is just an example. A 40% win rate with a 1:3 risk reward ratio consistently outperforms a 80% win rate with a 1:1 ratio. So it is not the strategy, what is the probability, what is the strategy success, what is the probability of success of your strategy which matters. It is about your risk reward ratio, end of the day, which determines whether you will stay long in the market, whether we will be able to compound it. So what is the fix? Calculate your risk reward ratio before every trade. If the risk reward ratio is not suitable, probably you see 24,000, imagine that you want to go short at around 24,050 and you see a strong support at 24,000 itself, then probably my risk reward ratio and your stop loss is 60 points. Imagine this, it might not give you it's not a favorable risk reward ratio. So in that days, what do? Just avoid. The days of no trading days are better than you trading and losing the money. You just get this across. So fighting the trend, never fight the trend. Say suppose the market is bullish, don't think that the market might reverse from one point. If the market is so bullish that it can take out all resistances on one particular day, if it has happened to you, put that in the comment section. If the market is bearish, no matter what levels you see, put S1, S2, R1, R2 in the resistance zones, it might take it out and then it might make fresh highs. The market will always surprise you when you expect it to surprise you the least. So never fight the trend. Trend is your friend till the end where it bends. So you wanting to be right about a reversal more than wanting to make money. The fix is trade with a higher time frame. I always tell you, when you are taking an entry at around 5 minutes time frame, always do the analysis for 3 time frames. Higher than 5 minutes is the entry. Do an analysis for 15 minutes, 30 minutes, probably 1 hour, and then 4 hours. This is excellent for intraday trading. Understand this: the trade with the higher time frame trend as your default bias. If you want to counter trend trade, if you are doing counter trend trade, probably you are a scalper. If you want to counter trend, you want to play for even for the retracements or mild pullbacks, then a small size strategy with its own rules should be set, and it's not an emotional impulse dressed up as an analysis. So if you are trading, I would definitely ask you to avoid trading the pullbacks or minor retracements, because I take only one trade per day. So I probably say, suppose the market is going up and I expect the markets to come down, give me a retracement, I would try to buy at the retracement rather than short and then make money in shorting that retracement. I would never do that. So if the market is falling, I would wait for a pullback to short the market again rather than buying it at the dip. Because what happens if you're trying to catch a knife, you are bound to cut your finger, right? So never fight the trend. Trend is your friend till the end where it bends. This is the mistake number 6. The mistake number 7, you don't have a journal, no review. You are probably based, your entire trading strategy is based on someone else's analysis. Please avoid that. See, there are 2 ways of making money in the stock market. You give the trading tips and make the money, or you trade by yourself. Probably what I do is I trade by myself, and then we make the money and make the educational videos. Understand this: you have to invest in yourself. When I mean to say you need to invest in yourself, you need to educate yourself. How do you educate yourself? Probably you can say Trading in the Zone. Trading in the Zone is the best book which everyone recommends. Trading in the Zone. Then Intelligent Investor by Benjamin Graham. Fine. Which is the third most important book? You would be shocked to know that's your own trading journal. In another video, I will tell you how to maintain a journal, but maintain a journal. Now, what are you supposed to be doing? Record your entry, record your exit, record your target, and what are the stop losses it has been hit. If it was hit, what was the mistake you did on that particular day? What was the time you entered? Log in every trade. So you review this. In fact, I generally recommend you to review it once in a day. But once in every day would not be possible to review it. At least once in a week or once in a month is enough. Make a summary of every trades, because if you are keeping a journal, imagine I have kept a journal for 10 years, right from 2015 till 2026. Now it is almost 11 years now. I have this journal. This acts as an important repository for me to frame a strategy, to understand where I went wrong on a particular day. It's not that you will never make mistakes. You are bound to make mistakes, but you are human in nature. That is the human mentality or the habit or nature. You are bound to make mistakes. At least you can reduce or minimize those mistakes when you sit for trading. How is that possible? You maintaining a journal. Entry, exit. This is a simple way I'm explaining it to you, but you need to maintain a journal. This is the exact systematic way wherein how do you maintain a journal, I'll be coming up with the next video. It will be followed. This video will be followed with the next video on how to maintain a journal. So these are the 7 mistakes. Let me recap it for you. If you have watched the channel till now, I would request you to subscribe. Probably you're not paying anything just to subscribe to the channel, but you subscribing it and putting one comment of appreciation will help me to bring in more videos. I am not trying to gain money by selling courses. I have made everything free here in this YouTube channel. I'm not selling you the recommendations. I am genuinely trying to educate you, as well as I will have a one-on-one interaction with you as well. That's the only way wherein I can interact with you, is interaction through the comments on the YouTube. So please be generous and put that comment. So let us summarize this, recap it. No stop loss, put the stop loss. If you are not having a stop loss, don't take a trade. If what happens, say suppose you say, sir, I don't want to keep a stop loss, or probably I'm not disciplined enough to keep a stop loss. I'll give you one trick. This works as magic. Have one of your friends to execute the trades for you. If not your friend, say suppose if you have a partner or a girlfriend or your wife, let them execute for you if they are available and if they genuinely understand the market. No, get one person who he's sitting to trade with you, let him execute the trades, you do the analysis. At least he knows he has to cut the position at the stop loss which is determined. You need to catch hold of one person, or if you can bring that discipline in yourself, there is nothing like that. So get this fixed right now. If you are able to fix the stop loss, not move the stop loss, make it rigid, your 60% of the problems will be taken care of. Trust me. Over trading, never take, if you have decided 2 to 3 trades is all I'm going to take a trade, and 1 to 2% is the capital which I'm going to risk that day, that's it. Shut off your system and go away. Do some other activity. Take a book or read or watch a movie or just go for a walk. Don't sit in front of the system. The more you sit in front of the system, you will be tempted to recover that loss. No revenge trading. No return trading plan. Have it everything in writing. Now let me show it to you, something simple which I have made for myself. You have this cue cards. Okay, you get cue cards like this. You get cue cards like this. You get it in Amazon or any other online. Get these cue cards. Right. See, I have written all the strategies here. Get these cue cards and write important notes, so that when I sit to trade, I just have to flip it and I just have to read it once. You will refresh your memory. Every person needs to refresh his memory before sitting to trade. You should not feel that, oh fine, oh my god, I should have read my strategy again before entering a trade. This has happened with me many times. So although I take a printout, so probably there are other ways of sticking it in front of me. The best thing is have a cue card which should be small enough to fit into your pocket, so that whenever, even if you're traveling, probably even if you're going on a vacation, and if don't miss a trade, very rarely a trader misses a trading day, you can carry this and you can just revise this or memorize it, or you can make an important journal it as well every day. So no return trading plan, no trade that day, as simple as that. Poor position sizing. I told you one simple trick. 10 lakhs split into 5 lakhs have 1% stop loss. That's it. You are done. You would be positioning your sizes very properly. Ignoring risk reward. I tell you 1:1 or 1:2. If your win rate is 40%, always keep 1:1. If your win rate is 40%, always keep 1:1.5. If your win rate is more than that, or whatever it is, I would generally suggest you to keep it 1:2. Risk to reward ratio should be always be 1:2. More, better, nothing like that. Never fight the trend. I already told you, no journaling or review. Always have a journal. How to keep a journal, how to maintain a journal, I'll make another video. So that's it, guys. And if you really like this video, do show your appreciation. Just one comment, one subscription, one like. That's all it takes to motivate me. And trade safe, and watch this section for more. We'll be coming up with more interesting videos and something which is actionable plan which you can make use for your day-to-day trading activities as well. Thank you. Have wonderful days ahead. Bye-bye.